The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
In the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, zip code 19143. Boys and girls, we have a quiz today. We have a beautiful portrait here, and I would like to have anybody try to guess what that portrait is and tell me what it is, because there's a huge prize involved. And here we have, it is May the 17th. 1792. Today's the birthday of the New York Stock Exchange. If you see the two dudes on the right with the top hats, one is Arch Crawford, the other is Norm Winski. Believe it or not, those were them and their other lives. But today is the birthday of the New York Stock Exchange. No, I actually I was back in 1643 with the tulip bulb. I bought at the high, Marshall, so I just wanted to let you know I paid $18,000 for that tulip. And but I didn't go short. I bought it, and I was stopped out at 50 cents. Anyway, let's take a quick look here at the DAX today, because we've had a pretty good run here, and we've made a nice little ABCD pattern up here at the top. I think we've made a double top in that DAX over this last few days, but we'll have to wait and see. The next one we want to no, I don't have the plan anymore. You guys are too quick. Let's put up the FTSE here, because this is the easier of the two trades, because it is making a 78% retracement, and we'll be able to see that right here. Now, yesterday in the stock indices, they all hit the 78% levels except one. There was one that didn't quite do it, and that's the one we really need to talk about. The NASDAQ hit the 61% retracement of the previous day high. The S&P hit the 61% retracement. The Dow Jones hit the 61% retracement, but one of them did not, and that's the one we need to talk about, because that is the one that I believe has the least amount of risk for what we're looking at here. And if you'll bear with me these days, let's see if I can find that. Yes, here we go. And we're going to take a look at this one. Here is a potential triple top in the, you see the two double tops. This is the Russell 2000. You see the two double tops that we had back in January. We had the big break. We rallied back, made another high, almost exact high in March, came down again to a 61% retracement, and then yesterday we took out the highs. We made a triple top up here. Folks, all you have to do is put a stop sell under yesterday's low, actually the low of the day before, which would be at 58. Put a stop sell at 58, so you're risking 3 points, and if that's right, that's going to make a lot of money if it is a triple top. Now, if it turns around and, heads bejeebies upstairs like it usually does, then you're going to be out. But you have to wait for the market to go lower first in order to trigger the stop sell, in order to quantify what your risk is going to be. So that's the main thing that you want to keep in mind as we're looking at some of these. But that is a classical triple top pattern, and if you look at it closely, you'll see it's formed by the beautiful ABCD pattern that's there too. So you've got multiple patterns coming in at a very important spot. And also, this is a pretty important day on the astro calendar, as we know from our good friend Norm Winski. We had the new moon just 2 days ago, and then we have some big aspects that occurred on both on the 17th and the 18th, to pay particular attention on that, because it could be, very, very interesting. So we'll watch that closely, as we always do. Now, the next one that I would like to talk about, of course, is the gold market, and I just want to get this up here. Let me just put this up here. This is what I want to show you, folks. This is the open interest in the gold contract at the Chicago Mercantile Exchange. I want to bring this up. You can do this yourself. All you have to do is go to www.cme and take a look at it. But if you'll notice here at the June contract, 321,000 is the open interest, and if you'll notice that the open interest dropped you'll see, excuse me, if you look at the far right, at 234,000, it dropped 12,000 in the contract for the June, but you'll notice that the August, which is the next most liquid contract, was up by 4, but that's still a -8, -8,000 with the market going into new lows. That's bullish, folks. That really is, and we hit the magical 1285 level again, and it was a beautiful 3-drive pattern. Overnight, I had 3 people send it to me, so I know it had to be something pretty significant because we went right down to just a tad below 1285, 1284.70. We've rallied a little bit since then. Whether that means much or not, I don't know, but it looks pretty interesting if nothing else. So keep in mind that these don't always work, but that's what we're watching today. Those are the 2 big ones that I think look real interesting anyway. A lot of them look interesting, of course, but fortunately you can't do them all, so you want to try to do the ones that you possibly can do. Now we have another market that is acting pretty nicely, and this is the crude oil. I sent this out yesterday because it was very apparent that we were heading up to at least $72 a barrel. We've hit 72.30 so far this morning. The key here was, if you'll notice the time period between the 9th and the 15th, that 5-day time period, all they could do was make a 38% retracement. That's usually a very, very bullish sign. That's a high-level consolidation. And you can see the ABCD structure there can take you all the way up to either 73 or 74.50 a barrel. And probably, all it takes is a little bit of power here, and you could certainly ease. Now, if it reverses here, you'd have a potential for a double top. But right now, and you'd have to get below 70.35 to even think of that. So right now, the crude oil still continues to go a little bit higher, and it's defying all the fundamentals that are out there. So sort of pay attention to that. I think it's something that would be very, very interesting to watch. But those are just a few of the ones that look really super interesting today. And there's always a bunch of them that we like to look at. But the really one that there's a whole bunch of them. But boy, let me tell you, there's one here that looked really powerful here. If I can just find it, doggone it. I do so many of these charts for you. Then when I try to put them in a file and I write down what they are, I never get them to come up nearly as well as I would like to see them happen, and that's the really bad thing. Here's one I wanted to show you. We're talking about interest rates. I want to show you the difference in the world in interest rates, folks. The German bond is equivalent to our 30-year bond, and look at our 30-year bond in blue. I mean, it is just getting trashed, whereas the German bond, the rates on the German bonds are holding firm, and they're not, going up like they are in our market. So that's very important, and that should mean that the euro should start to strengthen, but it hasn't as of yet. It still bounced a little bit this morning, but it still has held that 78% level. Down near that 77.60 level that is so very, very important. So we'll need to pay attention to that. But the main thing is keep an eye on that open interest in the gold, because open interest dropping, making new lows is a very bullish sign. That means all the sellers is sold out. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I believe we have a caller from Philadelphia. John, are you there?
Welcome to Philadelphia, Larry.
Hey, thank you, my friend. What can I do for you?
Question for you on bonds and yields, please, on that ZBM, the June contract. The low this morning, like 2 a.m., was 140 and I think 12 ticks, and that is a 3.25 yield on that 30-year bond. Mm-hmm. And I showed you in the Tiger's Den that 325 on the 30-year is right at key FIB 618 resistance price swing highs. My question is, if this ZBM contract breaks to new lows, do you have any way of knowing in advance whether or not we get dynamic, with, as Tommy O'Brien would say, wide price spread lower?
Yes. That's important, John, because we are at this really critical level. I saw that this morning, and I'm glad you sent this chart. But basically, in order for this market to really accelerate, you're going to have to get a wide ranging down. But as you pointed out, it is extremely oversold. And it would be not unusual to see it rally several points from here. Still be bearish, and we can get up to 143 and not do very much. But it is extremely bearish. But the key here is the fact that you're going to need a really wide-ranging bar to make it move. What's amazing is when you look at the German bond compared to ours, my gosh, they're like two different markets. So rates are certainly rising here in the United States. But as of yet, they really haven't. Long term, it still looks very bearish, but we are extremely oversold, and we could easily, have a correction at this level. But I think the easier way to play it would be wait for the correction and then sell them again, because the trend is so sharply lower, rates going higher. That's the way it looks to me, but I could be wrong. The second one that you sent us was very interesting too, but it really shows that multiple place where we've hit the Fibonacci level 618. We've hit it 1, 2, 3, 4, 5 times here since October, spot on. So either we're going to go blasting through it very, very easily and head up towards 3.5. It's going to be interesting to see.
Yeah, I have to tell you, I personally get very uncomfortable when we get markets at pivotal levels. I invariably, over the past decades, do something wrong trading-wise when we get at spots like this. So, I guess I'm just going to have to remain uncomfortable.
I have a special club for that, John. If you'd like to join, it's sort of like the Howdy Doody Club. I'll send you a badge and a photo ID, so you'll be able to be a permanent member. Happens to all of us.
I love it. I'll take it.
Yeah, it happens to all of us, and one of the reasons we follow it really closely, and we want to get on board the best possible way we can. And sometimes, when you look at these, you lose track of, what the long-term perspective has been. But I have to give you hats off for your way you've handled this yourself, because you were calling for that bond move a long time ago, but now we are at the really critical level in rates, and we could certainly see that. So, if you feel a little bit queasy about it, then the best thing to do is to don't do anything about it, because not having a trade is a good position, because you're ready to act. You don't have to have a trade on. So just try to, follow the ones that you feel the strongest on, and we'll have to wait and see. I know that retracement this morning came right at the 78% level. So anything below, 140.10 in that 30-year bond would tell you that this thing could start to accelerate, i.e. rates going higher, but it's still rather early.
That is exactly the course of action I'm taking tactically. So you've trained me well, and others. So thank you very much.
Hey, could you stay with us just one more second? I wanted to talk to you just a little bit about the grain markets, because of the fact that I'll post this chart of corn over the last week, and we're having some really hot weather, John, already. I mean, this is only the 17th of May, and we're seeing, in the mid-90s in some places. And I know the corn's not even popping up yet, but this is highly unusual to see this hot of weather in May, and I don't know if that's going to be a prelude of things to come. But boy, these charts are beginning to look pretty bullish to me. I don't know what's your take on it.
Yeah, Larry. Tactically, people in the den know one position I've been holding for 2 weeks. I continue to hold that is a long December corn 450 call option position. Mm-hmm. One that is slightly in the money since I bought it 2 weeks ago, but would not really pay off, of course, unless we get a dynamic rally. Mm-hmm. But I'll share three factors that suggest to me the upside is 20 to 30%, and the downside is 5%. Mm-hmm. And the idea is, number one, the supply-demand balance here in the United States has tightened up, and it's just been a slow tightening, going from one of excess supplies back during that harvest of 2016, 2 years ago. I think the spot price got down to $3 spot at that time, and ever since then, the supply-demand balance has tightened, and people in the trade always talk, they measure how tight or loose that balance is by the amount of ending stocks likely to be on the shelf at the end of the marketing year, and that's September 1st of every year. So that number has come down, meaning it's tightened up. So that's number one. Number two, let's us not forget, Argentina suffered a drought December through March 1st, so that crop is smaller. Number three, the Brazilian crop. Now, the Brazilian crop, the way they grow corn in Brazil is different in that it's closer to the equator, so they can actually fit in soybeans early, harvest it, plant corn, and then harvest that. So the corn crop is a second crop, and that has endured dry conditions the past 6 weeks. So that's going to be less too. Not dramatically less, but less. The bottom line is, with those three factors I just mentioned, if for whatever reason the U.S. Yields per acre, if they come in less than expected, and right now the trade's expecting come end of this year 174 bushels per acre nationally. If that comes in less, you could get a situation where corn could be up 20 to 30% from here, depending upon how much less.
That makes really good sense. Well, I spoke to Cy Only yesterday, and he feels pretty much the same. And in fact, he was mentioning he was buying soybeans today. So, I'm sure he's already started buying. But this weather pattern is something that we got to keep an eye on. Fortunately, we have Rich Anderson and Cy looking at it for us, and along with you. So we'll keep the folks informed that if it starts to warm up, because if we're having this kind of weather in May, my guys, June, July, and August could really be something. So we want to watch it, because we know that when the weather hits, it can really cause massive problems and also good opportunities, and that's what we're looking for. Hey, John, thanks for joining us, my friend. Yeah. Thank you very much for all you do here. We appreciate it. May God bless. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got a question, a request to take a look at the biotech index, and I've got XBI. I'll bring this up to let you see it. We're completing a big ABCD at the 78% level. There's something that bothers me here about this chart. I mean, it's a good pattern, but it's a weaker than market stock, folks. Look at the last 3 days. We've been below the 78% level when the market has been really strong for the last 7 or 8 days. That's a bad sign when you have a weaker weaker than market stock. That's all I can say about it. The pattern's there. Your risk is very small. I wouldn't risk more than 50 cents more on this one, but that's what it looks like. There's another one that is really in trouble that I've been talking about for quite some time. We've shared our feelings here, and that is Deutsche Bank. Folks, this is just from a day or so ago. We are now below 13. We're trading in the 12 range now. This chart I've mentioned many times looks this is just over the past year and a half. This chart looks very similar to Lehman Brothers, folks. I mean, it really does. This used to sell for 150, and now we're selling for 12 and change. This is just really bad. And when they came out in January and offered the stock at a 35% discount, holy moly, guacamole, that's the one that your grandma said, if it sounds too good to be true, it most probably is. And that was something that you had to pay attention to. And now, of course, those people are 35% under that. So this looks really bad. And the reason why it looks bad is that Deutsche Bank is the leading counterparty risk person that we have going on in the world. I mean, their fingers are everywhere. So if they run into problems, it's going to be pretty nasty, I would think. So that's my 2 cents worth on Deutsche Bank, but it certainly looks like it wants to go lower. It has lots of problems, but we'll see what really happens. With it. We're watching it. I mean, it looks like it wants to go a whole lot lower. That's basically the bottom line. I wanted to share with you the strength that we're seeing in the silver market a little bit, because this market has really, this is what I wanted to discuss this morning, because someone brought this to my attention, that I've always talked about silver and gold and the fact that I'm waiting for silver to get down below 16, which we did not do, and we're trading higher now. All we did yesterday and the day before was make a 78% level when we're making new lows in the gold, as you can see by the blue line. The question that they posed me, why could it be that silver is actually faking out, the gold traders by thinking that stronger, whereas, the gold is much weaker. In other words, they're buying silver and selling gold, and why they're doing that is because gold is so very, very weak. Well, if I believe that, I would have to believe that the markets are manipulated. And frankly, folks, I do not believe that they're manipulated. I'm 99.9% assured that they're not. They can be manipulated for a short period of time, no question about that. I remember sitting back in Chicago in the 80s with Mark Douglas up in the Lynn Waldock office, and there was a W.D. Gann guy there extorting the virtues of soybeans at this price that would never go below 95, whatever it was. I think it was 95. It was 8.95, 3.95, whatever. It wouldn't have been 8. It would have been like 4 or 5.95 or something like that. And this old timer was sitting up there, and he said, "That's such a bunch of BS." He said, "That there's nothing to do with it." And the guy said, "They're just not going to go below it." He said, "I'll bet you $50. And the trader says, "I don't gamble, but let me show you something." About 5 minutes before the close, he picked up the phone. He said, "Sell 100 beans." I think it was July beans at the market, which, 20 contracts. And boom, it just dropped immediately 10 cents. And the reason why, it was very illiquid at that time. And that was pretty much it. Anyway, that was neither here nor there, but that they can be manipulated for shorter periods of time. The Forex markets are much, much harder to do that with because they're so big, but the others, they certainly can be, but I don't believe that they're manipulated in any stretch of the imagination. So let's keep an eye on that as we follow some of these markets going through here. The oil prices, I don't believe, are manipulated, Tucker. I do know that there are 6 people in the world that control about 35% of all the oil trading that goes on in the world. 3 of them are in Singapore. There's one in London, one in New York, and I believe the other one is in either Dubai or Kuwait. They are very, very big, and you don't know, well, some people know who they are, but they stay under the radar. But they are known to people in the business. And we've had a guest on, if you'll remember, I can't remember, Kyle Cooper from Houston is in the energy business. We'll have him on in the next month if we can. And he's referred to some of this stuff that the people that are very, very large in the business, they do a lot of hedging and stuff like that. So those are the big six. But they follow what the market's doing. I mean, look how symmetrical and technically beautiful crude oil, gasoline, and all these things are. Just take a look here at the heating oil chart here, folks. This is a day behind because we're now above the 1.27 level by quite a bit, but it's been following along. I mean, it's been in a really strong uptrend. We had a 3 drive to a top pattern. It stopped for a little bit, but then it just could continue to go higher. So it follows technical patterns, very easily. So that's the main thing to keep in mind, that even though they might possibly manipulate it, which I don't believe that they are, they still follow the technical pocket, the technical nature of the market. So someone's asking a question here about deep pockets. Hey, folks, it's not money that makes you money in these markets. It's knowledge. You can have a lot of money and still lose a lot of money. In fact, one of the reasons why doctors are usually such poor traders is because they have a lot of money and they think they can just throw a lot of money at it and make a lot of money. And it's not that. It's the knowledge that will get you there. It's not the amount of money that you have. It's the knowledge that you have. I really firmly believe that. So, that's just keep in mind. You just have to be a little smarter than the other guy if you don't have a lot of money. And if you don't have a lot of money and you want to learn before you learn how to trade. Do some paper trading and stuff like that. That's the main thing. You don't have to have a lot. I've posted these charts in here about the amount of margin that you can get on some of these things. I mean, you can trade $100,000 contract in the euro at the CME for under $500 for a day trade. I mean, and it trades beautifully all day long. You could find these patterns all day long in the euro. It's the easiest and the best thing to trade that you could possibly ask for. It's got everything you could ask for. Great execution, great liquidity, terrific leverage. I mean, it's just everything. And volume it's a volume that you can't believe. It's thousands of times bigger, than stock indices. So keep that in mind. So who needs to go to Vegas? Well, pretty soon with all the sports betting stuff that's going to be coming on, we'll be giving game price lines on the thing. I haven't made a sporting event bet, not counting the Derby, the Preakness, and the Belmont. I haven't made a bet on a sporting event since 1975 when Elvis Peacock did that Missouri flea flicker for Nebraska. I haven't made a bet since that time, and I shall not. That's it. Those days are over. Don't care, don't want to. Doesn't make any difference. Been there, done that. All right, let's take a look at something. Oh, we got the commercial already. I want to talk a little bit about car loans in just a second when we come back, folks. So stay with us. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I wanted to bring to your attention a chart sent to us by one of our friends from Las Vegas. It's about subprime loans that they have for autos. And what's interesting about this is it's broken out to, in other words, these people are defaulting big time. And that's very, very unusual. If you'll notice that during the financial crisis, during 2008 and 2009, it was only at 5%, and now it is almost 6%. But it's making a 3-drive pattern up here at that level, which is very unusual. And if you remember, those of you that get the newsletter, I'd like to point out that we talked about this a little bit, about the relationship of corporate debt to GDP, that we were also making that same type of a 3-drive pattern. And if you notice that those credit cycle peaks are very close, reliant to when recession starts. So I don't know if that's going to happen this time or not, but the patterns are certainly very interesting to really look at. It's really something, it's really quite amazing. Anyway, someone's mentioning here that the auto loans are a disaster. I happen to know someone in the auto business, and he's, it really is, it's really something. It's really something to read about it, because that's a big part of our economy, auto loans, as are home loans. But home loans, they don't default like they used to anymore. But we'll see what's going on. Anyway, okay, we'll take a look at some of these other things here in just a second. But I wanted to mention to you that we really need to follow this open interest in the gold market, because yesterday the fact that gold made new lows down at that 1285 level, we made a slightly lower low today by 1284 and change. And if this open interest drops again, open interest dropping as prices go down is a very bullish phenomenon. That means that the shorts are sold out, and there's no shorts left, and so the bulls come in and the market rallies, if that's the case. But it's a 3-drive pattern. Whether it's going to hold or not will have to remain to be seen. But we're seeing some tremendously bullish things happening, in the silver market, which is really interesting. And one other one that I wanted to bring to your attention, I'm going to be doing a whole special report again on these metals over the weekend, because there's one other factor that I'm waiting for to click in, and then I'm going to get really bullish on this gold. But if we take a look here at the gold-silver index. Now, the gold-silver index is, as most of you know, it's the gold and silver stock. This is Handy and Harnum, American South African, oh my gosh, there's so many of them, Barrick Gold, I mean, there's just a whole bunch of them. And that's what these stocks are. But if you'll notice what we're looking at here, during the February-March area, we had that 135 pattern that gave us a really good buy. That's when the gold was down around the 1320 level before it went up to 1270. 1370, and you can see where we are now. The gold is at the 61% retracement, and we're still making higher bottoms in the gold silver index. Now, part of that can be due because the stock market has been so bullish, but it's also due because the miners are more bullish. So that's another positive indicator, for a potential turn here in the gold market, if in fact it does turn, and we don't know whether that's going to do that or not, but that's one of the things that we're watching to pay very, very close attention to as we go through here. Someone's thank you for the compliment on the charts, Tucker. That's the compliments of Ensign Software. They do that. I've been with them for 35 years, so we'll keep an eye on those as we go through here to take a look at them. Someone's asked a question about putting the chart up of that IWM again, and if you'll give me 1 second, I will. I think I did it so that I would be able to. Oh dear, let me think I did. You never know with me. Just a second. Here it is. I got it here. Yeah, here it is. This is the IWM if you want to be thinking about something. Here is the scenario that I'm looking at. The IWM has made a triple top. Double top first between January and March, and now we've made a triple top. We've taken out both of those. Now, my assumption is that if this is a triple top and it's going to fail, and it has a possibility because you have a butterfly pattern there, you have a beautiful ABCD pattern fitting in right with new highs, 161.34. We've taken out the high of March. We've taken out the high of January. Now, if this is going to be a triple top, it's going to reverse. And what you'd want to do is you would want to go back. This is Thursday. You go back 2 days, Wednesday, Tuesday. So Tuesday's low is at 158.12. So you put a sell stop at 158.10. You'll only get filled if it's on its way down. So if you get filled there, you put your stop immediately above the high of the day, and that would be a $3 risk. So you're risking less than 2%. And this would have a profit potential of going down to at least a 140. So you're risking $3 to make to make 20. That's a tremendous 7-to-1 risk-reward ratio. You don't get those very often. Now, it might not work, but the probability could happen. But it's got to execute first. You've got to get below the 158.10. You don't want to do it here because you could still go higher. So that's the whole premise of trying to find something that's going to work in your favor. Now, someone's asked a question about the options. I know less about options than just about anything, but if you're going to be interested in doing that, to buy a put, but I wouldn't do it until it gets below that 158.10 because that's when it would trigger. Then you could buy the put. Your risk will be limited then, but you'll also have pretty good profit potential. So you'll have to talk to somebody, ask some of the questions at TFNN, the people with Thinkorswim in here that know quite a bit about it. Plus, a lot of people in the room are really good with it. So pay attention to that because that could be a very interesting one, to follow. But that's what we're really doing. So this morning we're having a little bit of strength here. Well, the Dow sold off a little bit. The NASDAQ is still down a little bit. Nothing too much happening. We got gold is down a little bit, but still off the bottom. And the bonds are still around this area, 140.26, so not too much happening right here. The crude oil got up to 72.30, and then has backed off about 30-40 cents. Nothing big going on to that market either. So both of those are telling you not too much is going on from this level for sure. But we're going to have an interesting time here these next few days. Remember that Norm Winsky was on Monday and warning us about these days of the 17th and 18th because of the big cycle phenomenon that was due, and we've started to see some pretty big movements in some of these things. So we need to pay a pretty good attention to some of them because they could really be, very, very powerful here before this thing finally comes done. Well, undone or whatever you want to say. So we'll watch that very, very closely. But this is a strong cycle day, as is tomorrow. Both of those are very, very important. And so we'll remember to take a quick, to keep a quick keep a good eye on it. That's the main thing that we want to be watching. One other, someone's asked a question about the head and shoulders pattern in that NASDAQ that we've been following. I don't see anything different in that from yesterday or the day before. All we did was go up there. If I have time, I'll look at the coffee, Bob. In fact, I will do that right now. Oh, we're going to have a break. Bob, I'm going to look at that I'm going to have a time here to do it right after the break. And I'll pull the coffee up. I don't trade it, as most of you know, but I will have the chart on it, and we'll take a quick look at coffee when we get back. 877-927-6648.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so in multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we posted the chart of coffee for our good friend Bob up in Spokane, Washington. And as you can see, we had that bottom down there that we talked about quite a bit on the air here with our good friend Mr. Z. That was definitely a false breakout, a bear trap, and we were fortunate enough to tell the folks, you know, I don't buy that kind of stuff, but at 118 is where the buy was, and we had a huge rally, and now we pulled back to a 78% retracement. So I think this is a low-risk buy on coffee. But as my grandma said, if you ever have the urge to trade coffee, go lay down on the couch till that urge. That's just me, folks. I don't trade the soft coffee and sugar very often. But it's a beautiful pattern. Whether it holds or not will have to remains to be seen. Next week we're going to have a couple of our favorite guests on. I'll bring you up to date on that next week, and then of course the week after that we're going to have the Memorial Day holiday, which will always be a lot of fun. But until that time, I want you folks to always use stops as you're using in these markets, because we're having tremendous volatility, and it's just starting. It's going to get even a whole lot worse. We're going to see that VIX up above 50 sometime before summertime, folks. There's going to be some really big things happening, so we need to pay close attention to these things. So we'll watch it closely. And thank everybody here at TFNN for contributing everything. And the folks here in the den are really, really great people. I've been fortunate enough to meet a whole bunch of them, and it's a great family of people. You learn a lot, but boy, you get some great trades in here too. There's some really smart folks. And if you get a chance, listen to David White's show. I didn't get a chance to, but a couple of my friends did and said they really enjoyed it, about options. And if you want maximum leverage, boy, that's the show you want to look at, because David knows what he's doing. So pay attention to these stuff, folks. There's some pretty smart people in here. And I believe we have Mr. O'Brien coming up next. And then after that, I think we have Mr. Basil Chapman and then Steve Rhodes. So you folks have a wonderful day. Live every day in an attitude of gratitude, and may God bless. And I'll see you on the flip side.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!